The Psychology of Money by Morgan Housel, which was published in 2020, is one of the most important new books that explain the best way to deal with money and to make smart financial decisions. Most of the time, we do not make our financial decisions based on knowledge, but based on our behavior and psychology. Investment and financial decisions are usually made at the dinner table or in the meeting room where your own experiences, your worldview, your ego and confidence, and how much you accept risks, play a major role in accepting or rejecting these investments. Therefore, we can say that the idea of financial success has a simple relationship with your intelligence, but it has a strong relationship with your attitude and behavior. In this book, you will learn how your psychology can work with or against you while making your financial decisions. The Psychology of Money, Part 1, by Morgan Housel. Imagine that 10 years ago you started investing in the stock market with $1,000 every month, and the stock you chose gives you an annual return of about 15%, and you reinvest this profit again in the stock market. How much do you expect to be in your wallet now? In this case, the amount that you invested during the 10 years will be about $120,000, and the market value of your stock investment will be about $270,000, which means that you managed to double your capital within 10 years, and this is a perfect revenue. But suppose that you started investing 20 years ago instead of 10 years ago. In this case, the amount of money you invested will be about $240,000 only. But you will be surprised that the market value of your stock investment is $1,340,000, which is more than 5 times. And the more the number of years, the higher the profit returns. This is called the power of accumulation, which means that reinvesting profits again in the market will enable you to double the market value of your portfolio. And the more the number of years of investment, the greater the profits, and you will see this clearly in this graph, where the green color represents the monthly payments that you invest, while the brown color represents the returns that you get from the accumulation process. And this is the method used by the businessman Warren Buffett to build his fortune. In 2018, his fortune was estimated at about $85 billion, of which $84 billion were acquired after his 50th birthday. Bit to remember, the concept of accumulation has a great power in creating wealth and achieving financial stability. There is a very important idea that you must understand, as understanding it will help you to accept the way you spend your money and will enable you to understand and realize the way others spend their money, which you may find strange. Some people may do crazy things with their money, but you must know that no one is crazy. People were born in different parts of the world, and lived in different eras, and have different fathers and mothers, and receive different incomes, and have different values and opinions. They live through different economic conditions, and have varying educational levels and different experiences, and therefore each one has his own and different way in making financial decisions. What I may see as crazy, you may see as a great opportunity. For example, a person who has suffered from poverty for a long period of his life sees the investment's risks from a different point of view than a person born in a wealthy family, and a person who was born in a period when the stock market is flourishing would prefer to invest in it, and the person who lived in a period of high interest rates, you will find him more careful in spending his money. Therefore, we can say that smart people in different parts of the world may differ in their opinions about the reasons of economic recession or the way in which you should invest your money or the best investment or the level of risk and the returns that you should accept. Also, the writer tells us the story of Rajat Gupta, who was considered one of the most successful businessmen in America with a fortune of about $100 million, but despite his enormous wealth, Gupta was not satisfied or happy. His hundreds of millions of dollars through which he can achieve everything he wishes was not enough for him, but his ambition was to be in the upper class, which is the class of billionaires. And in order to achieve this goal, he made some illegal actions, which put him in jail for 2 years. The moral of this story is that a person has to know the appropriate time to say that's enough. There is no reason to risk what you have and need in order to get what you don't have and don't need. Bit to remember, we are all different, No one is crazy, so stop making social comparisons and learn when to say that is enough. Luck and risk play a major and important role in our life. Although you can control the effort you want to make to achieve a goal, luck and risk are usually out of your control. To explain this meaning, let us have a look at the story of the famous businessman Bill Gates, the founder of Microsoft, and the role of luck in his success. In 1968, there were about 300 million high school students in the world, about 80 million of them lived in the United States of America, and 270,000 were studying in Washington State, about 100,000 of them lived in Seattle, and only about 300 students attended Lakeside High School, where Bill was one of them. At that time, having computers in schools was very rare, but fortunately, Bill's school bought a computer, and although the computer was not a part of the curriculum at that school, Bill had the passion to learn the way of its operation and programming. It was also fortunate for Bill that he knew Paul Allen at that time, who was sharing him the same passion. They used to spend nights and days in the computer lab and develop their expertise and skills in this field. As a result, both of them were able to establish Microsoft, which is one of the largest companies in the world, with a market value of about $2 billion. Therefore, we can say that the luck, chance, and circumstances that were in Bill's favor may only happen to 1 in a million people. And what many people perhaps don't know is that there was a third person that shared their passion for computers at Lakeside School, and his name was Kent Evans, who was considered the best student in the class, and Bill considered him his best friend as the two of them talked for a very long time during their secondary stage. But Kent was exposed to the exact opposite of luck, which is risk. He died while climbing a mountain at the age of 17, which means that the risk and circumstances that happened to Kent may only happen to 1 in a million people. Bit to remember, nothing is as good or as bad as it seems. Everything has a price, and you can't take anything for free. Similarly, when talking about investment, the main idea is usually knowing the price you have to pay in order to build your wealth and achieve financial stability. But often, this price is not clear and you won't be able to know or estimate it unless you try by yourself. To explain this meaning, let's take a look at the giant General Electric, which was considered as one of the largest companies in the world in 2004 with a market value estimated at $1/3 trillion, and during the previous years, it was always ranked first or second in the world. Then comes the financial crisis in 2008, and the company's stock collapses from $40 per share in 2007 to only $7 in 2018. The blame placed on the CEO Jeffrey Immelt. He was criticized for his leadership, his acquisitions, investments, cutting the dividend, laying off workers and plunging stock price, and as a result of all of the above he stepped down in 2017. During the handover to the new CEO of the company, Jeffrey informed his successor of a very important point, which is that every job looks easy when you're not the one doing it, as the challenges faced by someone in the arena are often invisible to those in the crowd, and most things are harder in practice than they are in theory. Sometimes the obstacle is overconfidence, but often the most important obstacle is that we're not good at identifying what the price of success is, which prevents us from being able to pay it. For example, the S&P 500 increased 119-fold in the past 50 years ending in 2018. All you had to do was sit back and enjoy the power of accumulation, and you may hear someone advising you saying, hold stocks for the long run. This may be an excellent advice, but do you know how hard it is to maintain a long-term outlook when stocks are collapsing? Like everything else in life, successful investing demands a price, and the price is huge volatility in prices, which in turn lead to fear, doubt, uncertainty, and regret. The Netflix stock was able to achieve returns of more than 35,000% from 2002 to 2018, but as a result of market volatility, it traded below its previous all-time high on 94% of days during that period. Bit to remember, every job looks easy when you're not the one doing it, as the challenges faced by someone in the arena are often invisible to those in the crowd.